Thanks for staying with us on Hot Stocks with Ashu. And as I mentioned, we do have quite a few people who are joining us on the show. Currently, we have Ajay Argal, in fact, the head of equity at Birla Sun Life Asset Management. He is joining us on the show. Many thanks, Ajay, for being with us. Now, we have seen that, of course, the European crisis, that seems to be taking a toll on the Indian markets. And we also had currently that junk rating also being put on Europe. But with respect to the global market indicators, do you expect any positive triggers coming forth that will possibly impact the Indian markets going forward?
I think from a short-term perspective, technically the markets are a bit, or rather were a bit oversold. So that is what we were seeing, that some short positions had been built up in the Indian markets as well on the back of anticipated bad data, especially from the European markets. And as the thing has played out, and now there could be data points coming out of Europe as well as US, which could be positive from a short-term perspective. So we could see a technical bounce back, and that is what we are witnessing, and we could see some more of that.
Right. Also, Ajay, with respect to the small and the mid-cap universe, we have seen that they have been outperforming the broader market, the benchmark indices of late. Do you see a lot of potential within the mid-cap space, and which sectors would you be bullish on?
Yeah, mid-cap space, definitely there is a lot of potential from a long-term perspective, primarily because of the reason that growth rates could be higher as they are smaller companies. And that is why we always remain positive on the mid-cap from a long-term perspective. But if you look at from a short-term perspective, since they've already done well, and now the valuation discounts with respect to the large caps have come down significantly, they are still at a discount. There could be some consolidation of the mid-cap performance in relation to the stock, in relation to the large cap performance, which means that they may not do exceedingly well in the immediate term. But again, I mean, you cannot generalize, you have to look at stock specifics, and specifically in the construction, in the capital goods space, we are more positive on the mid caps, because we see that the valuation differential in those two sectors between the mid caps and large caps still warrants outperformance for the mid caps. So you have to be stock specific, you have to be sector specific, even within the mid and the small caps.
Right. Good morning, Ajay. You know, a lot of these construction companies and perhaps BOT companies, or build, operate, transfer companies, you know, when I look at them, the issue really is that if I can get a fix on what is their capital and how much will be the earnings per share, then at least you can look at them fundamentally. But they are continuously in capital raising mode, which means they continue to raise capital at the parent level, they continue to raise capital at SPV levels or their subsidiaries. How do you then shoot a moving target? Because, you know, value seems to be in the beholder's eye. So every time they need money, there seems to be value. When they raise the money, the stock basically goes to sleep again.
That's right. So one needs to be a bit conservative on these things. And obviously, I mean, you see this kind of capital raising even in a lot of large caps. It depends on the particular sector. Some sectors are definitely more capital intensive. So if you look at commodity sectors, or even to some extent oil and gas, you require a lot of money. So even there you take investment decisions. But when you are taking investment decisions, you see what is your potential upside with respect to the potential downside. So if you are seeing that a company is coming again and again to the capital markets, you become a bit more conservative on that company, or also you build in to your models that this kind of money is required, so this kind of dilution is required. So there are various parameters on which you can assess. You need not assess only on the earnings potential, you have to look at its return ratios as well. So you have to take a consolidated approach and take a relative valuation with respect to the other stocks within the sector or within the broad market, and they take a call. And on that basis, definitely there are still stocks, even though they are in capital guzzling industries, where you could make returns.
Right.
And obviously in these kind of stocks you cannot have a very long term buy and hold strategy. You continuously need to reassess them, whether they have reached their potential and now the upside to downside ratio has changed and not in your favor. So I mean, you need to do that on a continuous basis.
So Ajay, from that perspective, of course, keeping in mind that of course they may also require a lot of capital, do you feel strongly about buying or perhaps keeping out of real estate and power? And I'm specifically referring to power companies that are relatively new. So, you know, just as an example, not to a Tata Power that's been around and, you know, perhaps has the money, or has the assets already, but to the guys who are now trying to set up, because there's also the execution risk and the time risk as to when will they finally deliver these things. How do you look at these stocks? I mean, do you feel like you need to be there, or you're keeping out of them, both power and real estate?
Definitely both of the sectors we are not so positive. So we would be slightly underweight or even neutral. And I totally agree with you on the power side, all these new companies coming in. So the way we approach is we become more conservative there, as I was mentioning earlier. So it all depends on what kind of premium you want to give to them on the book value. So they are putting in certain amount of money. That money will be putting up projects which are going to get you earnings over a period of time. So what premium you are going to give on that book value is what you need to figure out. So generally we are more conservative there in the power sector. In the real estate sector, definitely things have improved from the bottom. But still there remains a lot of improvement to be done, especially in terms of the balance sheets of a lot of companies. The volume of transactions, of course, is very sensitive to the price. So when the prices have gone up, the volumes are not picking up to the same extent. So you need to figure that what are the cash flows of the real estate companies, and on that perspective we are generally not very extremely positive. So we definitely have some presence in both these sectors which you mentioned, but it would be on the neutral to slightly underweight side.
Alright Ajay, we'll leave it at that. Ajay Argal of Birla Sun Life Asset Management joining us on the show. Thanks so much for being with us. Devang, let me come to you. In fact, about the ADAG pack, and we talk about the Reliance stocks, we have seen that we've only seen a spurt in these stocks post